The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. And let's go ahead and check out where the market is after this holiday weekend and that downturn. Market decided to turn on back around on the positive news that came on in this morning. And so right now we got the S&P is up 13 points. We have the Russell is currently up 14.8. You got the Nasdaq up 27 with the Dow up 138. Oil's up $1.35 on the day, with natural gas being down about 0.75%. We got corn up 7.5. That's over a 1% move, and soybeans is up 29 points, nearly a 2% move right there on the day. We got euro dollar down 71 pips. We got Aussie dollar up 3. Pound dollar is down 46. The U.S. CAD is up about 0.5%, with U.S. franc up 1.2%, 116 pips on the day. Euro yen up 91 pips right now. Pound yen up $1.11. U.S. yen up $1.33. Looking over at gold, it's only down 2.5 right now. Been moving around quite a bit this morning. We got silver is currently down nearly 1% on the day, with copper up 0.5%. And let's see here. Let's go ahead and look at the market and see what's going on. Checking out what's in the news right now. And let's see here. Let's see what's up. And all right, getting a little distracted. But pulling this on up, trying to see what's going on in the news. And all right. What do we have in the news over this weekend? Of course, everybody knows we had the holiday weekend, and there wasn't obviously a lot of different reports coming on out. But we had, the bank holiday obviously here. We had the bank holiday over in Britain as well. And so not a whole lot of movement, but all of a sudden things just exploded on up. The employment level in Switzerland came in more positive than expected, came in at 4.15 million on an expectation of 4.11 million. And looking over here in the U.S., we had one of the highest consumer confidence reports that we've had in a long time. I'm literally going back in time just trying to figure out the last time it was all the way up here at 76. And that is positive for the moment, but it isn't necessarily positive in and of itself to have it that high. And I'm really I'm scrolling back through the years right now. I'm like 76, 76. And this has been a long time. And that made obviously just a massive surge in the market. It gave up off those highs already. But let's see here. Looks like 76% if I'm right. We're looking at January of 2008. Wow. Well, that isn't necessarily good news. So, we were at, that was, we know what happened just months later after that. Be watching out for the downtick there. But, we were up at like 75 in February of 2008. So, just months later, the market started turning around in 2007, and we had everything like up at 110 consumer confidence level, and before it started on that big downturn. But just a massively high, overly optimistic level, and this is really a good reflection of the economy and the market not being related at all. So people perceiving the economy as, the market. And just because the market's up on stimulus doesn't mean the economy is truly up. So we had that consumer confidence. We also had retail sales. That's coming out in the yen later. But there's been just a lot of numbers come out. There's been the manufacturing index came out. That came out worse than expected. And we had the HPI come on out. And that's the HPI it's an important number. It's the S&P, not the HPI, it's S&P CS Composite 20-year HPI. So it's the Standard & Poor's Case-Shiller House Price Index. That's what HPI stands for. And so it's basically the selling price of a single-family home in the 20 major metropolitan areas. And it came in not only high, but much higher than expected. And so a lot of people are like, wow, man, that means that the housing market's back. And, there is some positive things about that. There's a lot of positivity about seeing that number break up. They expected 10.2, which it hasn't hit in, forever. And it came in at 10.9. So we really haven't seen these kind of numbers for a long time. Why are we seeing these numbers? Does it mean that it's all back? Well, a couple of things. One, foreclosure sales are down. So just by having foreclosure sales down, prices are going to go up. You had Arizona up like 22% or something year over year. So foreclosures, basically they've been bought up. And so the foreclosures there, and then still having that easy money coming out, making it very, the low interest rates, making it very attractive to go in and buy a home. So with the easy money policy and with, the addition of the lack of, really, I guess, foreclosure sales, and you drill down into the reports, that led to, obviously, an increase in new home sales. And really, home sales right now are about where they should be on an inflation-adjusted basis if we had not have had the bubble. So in that case, everything's sort of on track, which is good news. But the question is in the construction. Is that market still growing? Is the demand still there? If you take away the Fed funding, which, there is that fear that that'll come out in the next, month or two. They talked about the possibility. That's what caused the market to really turn down last week, that possibility of yanking the plug on, not necessarily just fully yanking it, but, just lowering it. What kind of impact will that have when quantitative easing goes away? What kind of impact will it have when they do decide to finally start raising the interest rates? Will housing demand be there to keep it going? Well, I think clearing out a lot of the, garbage out and getting the foreclosures out of the system and, letting houses get back to normal levels where they should be. That's obviously great news. So now just the question is the economy at a point where it can really sustain a growing housing market. Not a bubbling housing market, but a growing one. And I guess we're going to see over time. Construction doesn't say that. New home sales sort of says that, but you have to look at the whole picture, not just the number. Now, the number, you can trade on the number, especially when it comes in that, ecstatically huge. You can trade that. You can enjoy that. I'm just saying, you got to look at the whole picture as from a fundamental long-term perspective. For a short-term perspective, I could care less how real or fake it is, because I'm in and I'm out 5-10 points later. So from a macroeconomic longer-term investing view, it's not as good a news as it sounds. It's not bad news, obviously, but it's not just, wow, everything is all better now. So that's just, putting those different pieces together. Let's go ahead and check out what we got coming up this week on the news front. Tonight, you got Bank of Japan Governor Kurata. He's going to be doing a little speech at the Institute for Money and Economic Studies, so nothing major there. But obviously, he's doing so many crazy things right now that everybody will be listening to every word that he says. Australia's going to have their new home sales and their construction work coming out, with the U.S. just having its home price index come out. That actually could have a bit of an impact, but I wouldn't make it a totally tradable event. So, and the HIA new home sales month over month doesn't necessarily come out at a scheduled time, and it's usually not a high impact. It does have its occasional high impact events, like I guess anything does, but it's not a usual, just high impact event. And let's see, let's go ahead and look at what do we got going on tomorrow. Well, tomorrow we're going to have overnight, let's see, German unemployment change is going to come in, but that shouldn't be any kind of big shock. Bank of Canada is going to have their rate statement, overnight rate, being released tomorrow morning at 10 a.m. Eastern Time. So definitely a tradable event there. And then down at 9:30 in the evening, we're going to have the building approvals and private capital expenditures coming out of Australia. So a little bit more impactful of a housing number coming out of Australia tomorrow, because that's more of, what's coming. So it's a better gauge on future construction there in Australia on the housing market. So we got basically those two main reports for tomorrow. If we look on Thursday, what we got coming on up, Switzerland's going to have its GDP quarter over quarter coming out, and then we'll have preliminary, which is huge. That's that's the big one. And they have, there's multiple GDP numbers that come out. This is the second release. It's not the biggest. So, but again, there's always 3 GDP numbers that come out. And so this number comes out right here at 8:30. And then we'll have unemployment claims come out the exact same time on Thursday with pending home sales. So, ones that are basically under contract right now to be signed. And it's a leading economic, indicator as well. So that number, after we just had this huge HPI number, that's probably going to add a lot of emphasis to that pending home sale number on Thursday. People are going to be watching that one. It's already a high impact number. It's probably people are really going to be looking at it after we just had that kind of number come out on the housing market. So I'd give it probably a little more oomph than normal. Sometimes there's certain announcements that you give a lot of attention to based on things that are happening, and then there's other times that you pull back on them. So with something's happening in Japan, all of a sudden that's going to notch all the Japanese economic announcements up. If home sales are all of a sudden going through the roof, then you're going to look at all the home announcements. If Bernanke says something about Fed and unemployment rate, then now all of a sudden the unemployment claims becomes more important. So different things like that, all those different pieces can have a little bit of an impact on how impactful a news event is. And then, of course, the deviation from the news expectation. For rolling into Friday, Canada's going to have their GDP month over month is coming on out. And that number comes out monthly 60 days after the month ends. And Canada is unique among most of the countries. It actually releases basically just a fresh GDP every month. And they also have a quarterly GDP that's really just it's a summation of all the other GDP, so it's not anything significant. But the month over month, obviously, they have a new, instead of having first one, second one, third one, they just release a new one every month at 60 days delayed. And then they'll have their quarterly one, which really doesn't mean anything because you just put all three of them together. China will have its manufacturing PMI coming out on Friday. That'll probably be too late. Let me see. There's not truly a scheduled time, but let me see. We can always look at the historical release times, and you'll quickly see the pattern of what time they release it. Yeah, it's going to come out Friday night. Sometimes it comes out on Sunday, sometimes Thursday. Yeah, so it's really not even not a tradable event at all for Friday there. And let's see, looking on in, no big things happening on this upcoming weekend. Bernanke is going to have a speech on Sunday coming up this week. But it'll just be a graduation ceremony, so nothing major there. So that should be market impactful. And then Sunday night, we're going to have a retail sales number this coming Sunday coming out of Australia. So this is actually the earliest look you get at how much consumers are spending in Australia. So it's a major gauge in consumer spending. That gives it a high impact, rating. And it is often off, meaning whatever their expectations are, usually they're wrong. And the more wrong they are, the better it is. And so, meaning the expectations, there's always a forecast. They go and they survey a whole bunch of economists. They drop out the high and low numbers and they average the middle number. That becomes the forecast. That's also why different stations, Bloomberg and all these other will have different forecast numbers because it's all who they surveyed. Usually they come in about the same, but as far as the forecast. But the more off the actual is from the forecast, the bigger the fundamental shock is on the market, and that's where you can make money in those straddle and strangle plays trading on Nadex. All right, we'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, welcome on back here to the Diagnostic Trading Hour. And we're just going over what's going on in the markets and everything over the weekend. And one of the things I like to point out is, if you haven't done it yet, definitely check out Nadex. You can hop over on TFNN's website, go to TFNN.com. And over on the right side of the page, you will see the Nadex banner. And click on that banner, and you'll be able to actually click under, there's an Our Products link, or even at the bottom of the page, you'll be able to find it. And there's a demo link where, you can get started and get your Nadex account open. And it takes about 15 seconds, literally, to get a demo account. And literally it's just on Nadex.com right there under the banner. And so you click on the, under Our Products. Once you've done that, then they'll send you an email, and you'll be able to log in right away, so that way you can see everything that's going on, and you can basically see what I'm talking about. I had somebody email me today. They're like, hey, I want to be able to follow along with some of the trades that sometimes you call out on the radio show and do things like that. How do I do that? And the way that you're going to do that is literally you're just going to hop over there and just click on Our Products and then on Nadex. And let me go ahead and show that to you here. I'll pull up a browser for you and post that on the TFNN Tiger TV, so you can check it out. And you can always check out the archives as well afterwards. But right here you'll see Nadex. So click on Nadex right there. And once you do that, Then under Our Products, click Demo Account. Now, the next step is you'll fill in your username, first name, last name, phone number, and email address, and click Apply for Demo. And that gets you set up, and they give you basically $25,000 of funny money to play with, and basically it puts everything in place for you to be able to take advantage of that. Once you do that, then you'll log into your account, okay? And once logged in, then the next step is you can start trading. You can get a live account, and let's see here. Once you get the live account set up, or by the way, to get a live account, just click on Create Live Account. There's a Create Account at the top. There's Create a Live Account on the Demo Account page. So, right in all that area, you can go in and click the Start button, and it takes about 5 minutes to get it set up. And there's only $100 to fund an account. A lot of people are like, well, do I have to have 25 grand or 5 grand, or, can I day trade? Yeah, you can actually day trade, and with only $100 in your account. Now, people put, 500, 1,000, 5,000, 10,000, whatever, you have the ability to do that you want to put in the account. But that's all you have to do to put that in there. And so with all those pieces, that's all it takes to get one set up. It's not like it's some massive process. And, it's not, there's not just like thousands of reams of paperwork and everything else. And as far as, education, there's a lot of education. We have education right here on TFN, of course, on the Diagnostic Trading Hour. You can always call in with questions. Also, you can go over here, and you'll see right under the Diagnostic Box Spread Analyzer, if you click on that, you can get access. You can log in, and you get access to the Box Spread Analyzer. You also now get access to the Binary Analyzer as well. And with that, we're giving access not only to the analyzers, but we're also giving access to the education in here. So you can go in here in tutorials. There's like a Getting Started section. There's step-by-step basics. There's, who and what is Nadex. There's, bull spread training, binary training. You can ask me questions directly. I have people write in and ask questions, and I'll answer those for you. You'll get access to the deviation levels, where I go and I post these. These actually come from implied volatility every day. We're going to pull the applied volatility out of the market, and the implied volatility is the expected movement built into the underlying option price. So, but right there, you can go and just fill those in. You can draw them on your charts. You can do whatever you need to do. And then spread scanner, you can go over here, and you can basically literally pull up the Nadex spreads and trade the spreads that are open. You can pull up the binary scanner and trade up any of the binaries that are open. And there's a lot of markets on here you can take advantage of. And we've made it really simple. So instead of having this is literally all the markets on the S&P right now. There's a ton of binaries. If I go over and I pull up something like the euro dollar, there'll be even more because they trade just around the clock. So what you do is you go in and you're like, I just want to see ones that, go from, we'll say, $5 to $30 risk. And the reason I say $5 is because, down here you get all these little ones that are 50 cents and stuff like that. Well, they're so far away, it doesn't even matter. So I'll put $5 on there. And now it really narrowed down my results. And maybe I just want to buy. So I can just click buy. And now it just shows me the buy side with the risk and reward. And I go, what happens if the S&P, moves on up to 16, we'll just say 70. I can put that in there. And now it'll give me the simulation price of what it would be worth if it actually got up to that price. So it's pretty cool. There's things that it does for you and how it helps you out. But stay there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So, again, make sure you go and sign up for that Nadex account, get access to the education. They do webinars. They'll send you emails on that. Also, you can go over to youtube.com/Nadex. They have a bunch of education there. And big thing, just email me with questions. You know, give me a call. Be happy to help you out. And what you want to do if you ever go over here is go over to Browse Videos and go to the playlist. So the playlist is, you know, basically it organizes everything for you. But there's a lot of good education out there. There's a lot of good pieces. But the big thing is you need something to make it simple, make it easy. And I don't care how well you understand them. I mean, I understand them backwards and forwards, inside and out. There's still a lot of math to do. And so, you know, if I go over here and I go, you know, I want to log into Nadex, and so I log into my account, and they'll give you, you know, like I said, they'll give you $25,000 in funny money. And if you, there's a way to get an account extended. If you need it extended, just let me know. I'll let you know how to get that done. But they'll find out with $25,000, and you can trade that. You can do whatever you want. And over here, you just go in and, you know, you choose live or demo, and you can trade the account. And but you're going to have so many choices. Like you're logged in and you're looking at, okay, I'm going to trade the S&P 500. Well, there's, you know, 3 spreads here, there's 3 here, there's 3 here, there's, you know, 4 here. So, you know, instantly you have 13 spreads long, 13 spreads short, 26 spreads you're trying to choose from. And this is what it looks like if you actually were doing the math on all of them, and you went in here and said, you know, show me everything. Then you'd see literally all of these spreads being populated. And right there, if I pull them up, I mean, that's all the math you got to be doing to be able to trade the spreads. And, when I look at a chart and I get a buy or sell signal, I don't have time to, figure out which spread I want to buy or sell. I want to buy or sell now. And so you're going to hop in there and you're literally just going to click, okay, well, I want to buy. Well, instantly that's going to get rid of all the sells after you click on the buy side. And then you're going to say, I don't want to risk more than $100 on the spread. Well, that gets rid of any trade that has more than $100 risk. And then you say, you know what, I don't want one that's like really has a lot of premium, it's out of the money, whatever, I want the at-the-market spreads. And boom, there you go, there's the spreads for you. So all those pieces combined, and you may not even say $100 risk, you might get rid of that and just say, put it at zero, what it'll do is it'll make it reset. So you can see every spread that's there and how much you have to put up to place that trade. And like this one, I mean, it's trading, right near the underlying market, $100 maximum risk. And by the way, a spread and a binary, totally different. Maximum risk does not have to mean your real risk. I mean, think about it. If you go in and you do an S&P 500 contract, what's your maximum risk? And maximum risk can be huge. So it's $50 times the value of the S&P if you did an S&P E-mini. So I mean, it's $16.35 times 50. So $81,000, almost $82,000 is your risk on the S&P right now. Well, is that really your risk? Well, I mean, I guess it could go to zero. I mean, but is it going? It's not going to. It'd be arbitrage because I mean, there's real value in all those companies. So I mean, just the metal and the scraps, of what's existing in those companies, there's value there. So that's not necessarily your planned or expected, or even maybe not even your realistic risk. Now, could you be risking $500? Yeah, the thing could move 10 points against you, and if you did 5 of them, so that's possible. Or there could be a flash crash. The thing pops 20 points against you in seconds. That could happen. So max risk it can't get any worse than this. Okay. So I go in here and I did the S&P. I only have $50 risk, or I only have $100 risk. It can't get any worse than $100 risk. That's awesome, because if there's some weird black swan event, you no longer have to fear that. You know that it can't get worse than this. And that is one of the big things I like. Also, I mean, it can bring your margin way down, equal to, some people go, well, sometimes, if I did 10 of those, my margin may be higher. If I did 5 of those, my margin may be higher in the future. It might be, but you know what? Tell me how you're going to split up an S&P E-mini. It's 1 or 2 or 3, right? I mean, you're not going to do half an S&P E-mini. So right here, I can do a fifth of an S&P. I can do, 7, I can literally do 3/5 of an S&P. I can do, because every spread is equal to 1/5 of an S&P. It takes 5 Nadex spreads to equal 1 S&P E-mini. So I can do smaller risk. I can do more exact risk. And if I do risk-based trading, which is how you should be trading, which is I risk this much percentage of my account maximum on a daily basis. Out of that amount, I risk this percent per trade. Then I can get a lot more exact versus having to have this fluctuating amount. I can get a lot closer to exact. So that's a big advantage right there when you're trading on them, is to be able to do that. And I can scale out easier. I mean, if you got 1 S&P E-mini and you want to get out of half now, you can't. Either you get out of all, or you did 2 and you took on twice the risk. So you're either going to have to double your risk or get out. That's the only way you're going to be able to scale out of a trade if you want to trade the minimum quantity over on, say, the Russell futures or things like that. Now, there are some contracts like gold that has mini gold. You got oil that has mini oil. So, but I mean, like in the indices, you can't do that. And even on mini oil, it's still $5 a ticket. It's basically, it takes 10 Nadex spreads, whereas half an oil takes 2 mini oil to take a 1 for oil contract. So you can even get a smaller position size. So I got a question this weekend that came in from the user that said, so if I want to risk no more than 5% of my account on a daily basis, and I would only risk a sixth of that amount on an individual trade, that'd only be like a $230 risk on, say, oil. And so to put all that number together, that means I'd need to have like a $25,000 account to trade oil if I was trying to stay inside those risk parameters. He's like, is that right? And I said, well, your math is right. So he was sort of like, wow, well, so how do I do this? And I was like, well, I mean, you got 2 choices. One, you could, not trade oil. Well, I guess you got several choices. Not trade oil. 2, you go to mini oil, at least cut your account, down to only needing 13,000. I was like, or you could trade oil spreads on Nadex. So you can take that $26,000 number, now you've taken it down to $2,600. So, if your account isn't large enough you can trade on Nadex. If you have a huge account, you can still trade on Nadex because the fees get capped at $9. Whether you're doing one contract, it's 90 cents. 5 contracts, 90 cents a piece, so $4.50. 10 contracts, $9. 100 contracts, $9. So you actually save money with a larger account too. So there's a huge advantage there. And again, you're protected against those black swan events, so the market can just fly against you. And so that's a huge edge. There's a lot of edges that you can use in Nadex. You got to learn how it works. It's a little bit different. I'm going to tell you it's not hard, but I'm not saying it doesn't mean you have to learn something. So not hard meaning you don't have to learn calculus and trigonometry and stuff like that. Okay, it's just basic addition, subtraction, maybe multiplication. So if you're doing more than one. Okay, so but I mean it's really it's addition and subtraction. But what we're doing is I'm doing all the math for you. So that's what I wanted for myself. That's why I had this thing built, because I love trading these things, but it seems exhausting going in and analyzing the charts and figuring out my buy sell and then figuring out which spread I want to trade and knowing that I had the right one and then going back and going, oh, there was a better one, and so I want trading to be easy, relaxing, simple, and I want to focus on the charts, not on the spreads. So I want to pick my spread and go back to my chart, and I want to do that like quick. So that's sort of where all of this, all these pieces came from, and it doesn't have to be hard. You can make it hard, but it doesn't have to be hard. It's funny how many questions I get where people are like, well, what about? And I'm like, dude, let it go, and like your risk just stops. I mean, this is no different from trading the S&P right now. You go in, I'm going to buy the S&P at 1658. It's that simple. 1658.7. So what? That's no different than buying the S&P E-mini futures. Okay, maybe it's a fifth of the size. Fine, buy 5 of them if you want to. Okay, then you can make $50 a point. Great. So there's nothing complicated about that. But there's this floor and there's this ceiling. No. Okay, the floor just means you can't lose any more money. So I can't lose more than $500 or $250 or $50 or whatever. That's all it means. It's like having a stop loss. But the cool thing is, and there's no big concept you have to grasp here. The cool thing is, if you go to maximum loss, you don't have to get out of your trade. You're still in your trade because you have until expiration for it to come back up and be inside that spread for you to be able to profit. And then people go, well, what if it goes outside? What if it goes above the ceiling? I mean, what if the S&P goes all the way up to 1690 today or 1695 today? Great. They're like, well, can I make money if it goes outside? Yeah. So you don't have to be inside the spread. It's just if you bought it, you got to be above the floor, okay? Because that's where your loss stops. So obviously, if there's no more losing, there's definitely no profiting at that point, okay? But you just your profit is where you buy and where you sell. Except you won't lose more than where your stop is. That's your floor, okay? And that's your worst case stop. So I mean, if it goes down 5 points, I could get out and only take a $50 loss, even if it says there's a $100 risk. I don't have to take the whole risk, And if I buy at one price and I sell at another, my P&L is the difference between the two. It just will never be greater than the maximum risk, and my profit will never be greater than the maximum reward. And then I find it really funny when guys go, I don't know, man. I mean, I look over at these Forex spreads, and these 2-hour ones, which, by the way, they have ones that are like, 23 hours. But, these 2-hour ones, I mean, they're only 100 pips wide. And I just don't know if I like my profits being capped by 100 pips. And I'm like, well, I get that. Just tell me how many days, real quick, just for, a reality check. How many days do you, on a single trade, consistently pull out more than 100 pips out of FX in one trade? In, out, same day. Like, well, I mean, yeah, usually they're like 20 or 30 or 40 pips. Okay, so let's have a reality check. So you're not really going in and getting capped because you don't usually ever have those kinds of profits. Most people can't even hold on that long to be able to accomplish that. So that's really not a concern. And if it is a concern, just hedge it. Just buy the FX pair and sell the spread. Buy the S&P 500 and sell the spread to hedge you. So there's a lot of ways around this. You don't have to go in and, I mean, whatever you think the limitation is, ask me the question, and I probably have the answer for you. So it's just a matter of knowing how to use the product correctly. I've got a question from the Tigers in here. Does Nadex provide live future quotes? Nadex is a futures options exchange, and they're in the U.S., they're in Chicago. They cannot provide another exchange's information. Their underlying markets are based on other futures, so they're a derivative because it's North American Derivative Exchange. So if I go over here and I look at what the stock indices are and the contract specs, it'll say, okay, well, the US 500 is based on the CME, E-mini, S&P 500 index futures. So you can't get the quotes from Nadex because they can't legally provide them to you. Okay? You have to get them from the CME, like through a broker. Thinkorswim would be one choice, like if you have a Thinkorswim account that's funded for live quotes. They can't give you Forex quotes because Forex, even though their contracts are exchange-based, the underlying market Forex spot is, over the counter. So they can give you Forex quotes, and they do give you Forex quotes and charts. One thing you can use as a supplement, and I'm not even suggesting it, okay, is what's called the master spread. It's the widest spread. And you'll notice most of these here are like 40 points, 40 points, 40 points. This one's 80 points. It'll probably be trading like right on par with the underlying market, give or take a couple ticks. So you could use that. You could use that chart. The problem with that chart is it's only going to be same day since it started trading. So you're not going to be able to see all the gaps. You're not going to be able to see, highs and lows and closes. You need proper charting. And so that chart's going to shut down at the end of the day today, and then you have a new chart on a new contract. So you will need something like what I use. I use NinjaTrader. It's a free platform. I don't use bar chart. I mean, people always go up and they're like, well, what about, investing.com? They'll bring that up, right? And they'll go here to the charts on here. And they'll go, well, they say they have real-time futures charts, because that's what it says right there, real-time futures charts. Well, click on it and then read, because it's going to load. And then at the bottom, there's going to be a disclaimer. Fusion Media, not investing.com, by the way, Fusion Media would like to remind you that the data contained in this website is not necessarily real-time nor accurate, despite the label of real-time. And this is not Nadex. This is people always tell me these websites. They're based on CFDs, okay? Contracts for difference, not the futures on the CME, okay? And they're like, don't use this for trading. So they say that right there on their site. So another one that people will go over and look at, let's see, they'll look at barchart.com. So you go into bar chart, and you go over here, you got a futures, and people will go in, they're like, okay, here's an S&P E-mini, okay, let me find the link to their charts, and I'll pull that up, and if you go in and you read the disclaimers, everything's on a delay of 10 to 15 minutes. Well, you don't need to be trading 10 to 15 minute delay charts if you're trading intraday, okay? So you can go back and you can get some historical data this way at least. I mean, that is a method you could use. But what I like to use is I use NinjaTrader. It's free to download it and use it, okay? For end-of-day data, you can get that free and a lot more at kinetic.com. Just go over there. I go and I use theirs. Again, it's free. And then, by the way, theirs is unfiltered data. So it's true tick insanely fast. Now, you can pay for futures data or you can get it free. If you connect to one of the CME brokers, CME-compatible brokers like AMP and other brokers like that, then you'll get your CME exchange fees waived. If you want ICE and stuff, you're going to have to find somebody else. So I use somebody else. I can't really promote brokers on air, but if you want to know who that is, I can tell you where you can get free live futures data without a funded account. Just email me at dmartin@tfnn.com. I'll be happy to let you know where you can get that. But I mean, there's your broker ought to have some sort of CME exchange fee waiver program for you. And I mean, it's like connecting to your futures account and to your data feed at the same time, and boom, that's free. That's all it takes. There's no trading requirements or anything like that. If you're paying for that, then you're throwing money away. But yeah, email me. I'll be glad to help you out. All right, we'll be right back after this break.
Take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And so, just going over just some different ways, different platforms, different resources that you can use as a trader. And now once you're ready to trade live on futures and stuff, then, there's more fees and everything else. But this gets you going. And the data you should always be able to get free. Live or demoing, you should be able to get free data. So if you don't know how to do that, let me know. But I'd be glad to help you. And there are several places you can get free Forex data feeding into Ninja as well. So I can help you on that. But you got to be looking at the underlying market. It amazes me how many people log in to Nadex and they start trying to trade off of these charts right here. And they'll literally go in and, they're literally opening the chart up and they're trying to figure out how to trade right off of it. And I'm like, you wouldn't trade a call on Apple by looking at a call chart on Apple. You can pull it up, but you wouldn't do that. You wouldn't pay a put on Apple without looking at a Apple chart, not the put chart. Well, Nadex is a derivative, just like a call or a put is a derivative. So you need to be looking at the underlying market when you make your decision on direction. And then you pick the appropriate derivative. So the appropriate, spread to buy or spread to sell, or binary to buy or binary to sell. You don't look at the risk and reward. That's another thing. People go in, and you don't go in on, hopefully, you don't go in on Apple and go, man, I like that. That's a $5 call. Or that's a $5, put. I'll buy that. Because, man, if it really moves, I can make a fortune. Well, that's great. Why would you think it would? And do you have any, besides the fact that you like the risk reward, do you have any reason for doing it? And so many people, they just throw all that common sense out the window when they come in to trade Nadex. You don't trade based on the option chain. You don't trade based on the derivative chart. You trade based on the underlying market, and you use the chain or the ladder, whatever you want to call it, to look at the risk, the reward, the different choices that are available. And it can be a little overwhelming and confusing, like I said, because you go through and you're trying to click through all these different ones. And so that's why I went in and I had this thing made for my own trading, because it wasn't even that it was overwhelming to me. It was a waste of my time. And I'm like, hey, if I want to buy, I want to go over here and choose live demo, whatever, choose my market, find the spread that lines up with what I want, and I want to hit buy. That's it. And then when it's up, then I want to be able to hit the order button, and I'm in. I want it to be that simple. And that's what I want to do. I don't have time I shouldn't be spending time on figuring out which one. It doesn't mean I shouldn't use the product, because the product is awesome. The risk is low, the leverage is massive, the margin is low, the fees are capped and low. So, there's a ton of advantages. The only disadvantage is I got to figure out which one. So my goal was just to make it where I didn't have to worry about figuring out which one, and so I could use that. And I can walk away. I can put a trade on and get on a plane and not stress out. I've done that multiple times. So literally, right before, I'm like, the Dow, man, it's about to pull back based on my analysis. I'm looking at my charts on my phone, and the market's about to reverse. Boom, I go and I put a sell order in on like a Dow future, and the thing's at like the high of the day. And I walk on the plane, no stress. I know what my risk is. It can't be worse than that. I don't have to worry about my stop getting hit and then it falling, Like it spikes up, hits my stop, stops me out, and I get off the plane and the market just dropped down and I was right and I got kicked out of the trade. I don't have to worry about any of that. I got a stop loss without having a stop trade. Market can spike up against me as long as it ends lower than where I sold it, then I'm going to make money. So, it is almost boring sometimes. It's so relaxing. Once you get it down, it can actually get a little bit boring, which is the way trading should be, by the way. So most traders get in there and they love the excitement and the thrill and the action, and the best traders are bored, okay? Because they're doing their analysis, they're taking their time, and they're being patient and waiting on the right things to happen to make the next step. But anyways, check it out, and let me know if you have any questions. I'll be glad to help you. Stay tuned. We have another great show coming up right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.